Hi, everybody. Welcome back to Healthy, Happy, Wise, Wealthy. I have with us today Xander Lehn, and he is an insurance professional. I know him from the Missing Link Network, and in our first episode, we had Jacqueline on from that to talk about the importance of networking, and networking has been good for both of us, I know. So I wanted to have him on because insurance is one of those things. In my opinion, I know a little bit about insurance too because, I had 20 years married to an insurance broker, basically. So I got to know a lot about that field. And I know for people, there's usually a lot of questions they have about insurance, and maybe they don't want to call to ask somebody because I think in this world, sometimes you want to know the answers before you call somebody just to make sure you're on the right track. So, and you have only been doing this a couple years, and you made a big life transition. I know we talk about that a lot on this show too. So, yeah, introduce yourself a little bit and tell us why you chose to go into this profession.
Yeah, thanks, Mary. I appreciate you inviting me on the podcast. That's pretty cool. Definitely a fun opportunity. And I did make a big life transition to become an insurance broker and work with the people that I do. And I love what I do now. Before, I was an automotive technician for like 12 plus years. I went to school for it, degrees, the whole 9 yards. And I loved doing it. But it became a little challenging to deal with, that I didn't have a lot of autonomy. I was tied to one place. I was doing a lot of work that I didn't have control over. And I really like having the ability to kind of control my own destiny, if that makes sense. And at the same time as I was feeling this tug, this push and pull in my career, I also lost a family member and experienced what happens when there isn't a plan in place. And um, I knew one of my good friends was a life insurance salesperson, and I said, "Hey, I want to find out about what you do." And after I learned, I said, "You know what? I'm going to make a drastic 180." I signed up that night for the classes, and while working a full-time job, raising two kids, wife, family, everything,
Mhm.
I did the 40-hour course in 2 weeks. Passed my test the first time, and just went headfirst into figuring out all of this world, and I haven't looked back.
It's very brave. Making a transition like that with family in tow and everything is a very brave transition to make.
Yeah, it's
You know,
definitely scary, but rewarding at the same time. And um, you know, I, after a couple years doing this, I would make the same decision again.
yeah. And I do enjoy just highlighting on this podcast that life takes turns and you don't always know where you're going. And lots of times those are career changes. And for you, it was just like, man, I'm making a change because you had that personal experience and you're
Hmm.
like, this is really the avenue I want to go. So I think, you do highlight or you do focus a lot on senior life insurance, final expense, those kind of things. So we're gonna
Yep.
we're gonna move into that. I know probably boomers are the boomer generation is in that age, and it's for most of us listening, it's either we're one of those or our parents are or a grandparent.
Hmm.
So this affects all of us, and life insurance in general does. It's something I know I got life insurance very young in my 20s,
Yep.
a term policy. So, can you give a general overview of the benefit of what the different things? There's three different types, right?
Yeah. Yeah. So real quick, you touched on something important that I
Okay.
primarily work with seniors. And a big reason is that there's 10 to 12,000 people in the US turning 65 every day. So it is a huge market and they need a lot of help,
Yeah.
and they're getting advertisements on TV, on Facebook, everything blasted this way and that. Um, some people say they get 100 spam calls a day, telemarketing, things like that. And so there's just a lot that is happening in that age group right now.
Mhm.
And so that's why I serve that market primarily, is because there's just such a big need. Um, it's a little easier for somebody that's 32 to hop online and click a few buttons and figure it out themselves. Maybe they're using ChatGPT to answer some questions, but
True.
if you're 72, you don't really use a lot of that stuff
Mhm.
for the most part, right?
Yeah,
So you asked one thing, that was, what are the different types of life insurance?
right,
There's two main types. One is whole life or permanent, and one is term, and that's temporary, or it has a time period where it expires. And there's a hybrid in the middle, and some people may have heard of it. It's called universal life. It can be permanent and it can term out. It depends on how it's set up and the purpose for why you're using it. There's a few big pieces that, when you're comparing those types of coverage on, like, why would I make one choice or the other? Um, Personally, I think that each one of those types of insurance has a great purpose. I have permanent and I have term coverage for myself. And here's why. I've 31, I've got young kids. If I pass away before they're adults, I want to make sure my wife has, the mortgage covered, bills paid, some living expenses while she's trying to figure life out without me.
right.
And so a term policy is great, because you'll hear the advertisements. Oh, you can get, I don't know, $500,000 for $30 a month. Um, and the only way they're able to do that is because it's term. At some
Right.
point, that's not going to be there. And the big statistic that they really don't cover with term insurance is that only about 3% of people that have term coverage actually pass away while it's active. The majority of people, 97%, live through their term policy and then get something different, or just, they don't have that anymore.
Yeah. How long are term, is it 20 years, 30 years, 10 years? What's the typical amount of time that you buy in term insurance for? And I imagine that affects the rate.
Yeah. So the longer the term, the more expensive the rate, interestingly enough. You'd kind of think it would be backwards, but if you compare a 20-year versus a 30-year, it's going to be a few dollars more for that 30-year, because they're taking on more risk for those
Right.
extra 10 years, right?
Right.
The longer you live, the more likely something is to happen. So the majority of term policies people look at are 20 or 30 years. But, a lot of people, we get our life insurance from an employer, maybe, right?
Right.
Um, and you might even hear, oh, you could take that with you when you go. But that type of term insurance, because almost 99% of employers only offer term coverage, uh, it's actually called annually renewable. And so every year, if you take it from your employer, it gets more expensive. It's
Mm,
your new age, and the rate can go up. There are some caveats to that. Some of them change every 5 years or whatever, but in general, um, having private coverage that you own is more secure and guaranteed than that employer provided.
yeah.
And one other really important piece of that is that, for the majority of employer provided coverage, anything over $50,000 of life insurance is going to be counted as taxable income for your beneficiary. And people don't know that. So they'll
Hmm.
buy up their insurance with their employer. And if something happens, it can significantly change their family's, income tax and things like that.
Yeah. And I definitely would say I would highly recommend if you have own a home, if you have children, if you have anyone that's depending on you whatsoever to pay a bill, that you have some life insurance. And the younger you are, the cheaper it is. I know I still have a policy. I think I started in my 20s, and I think it'll go another. I don't know, it's term.
Yeah.
I lost track, maybe another 10 years, but it's under $30 a month. They're right at that 30. So
Yeah,
that's worth it for that peace of mind of, you know, or if you have, kids you want to leave something to,
exactly.
whatever it is. Yeah.
It's a great tool, but that's all that it is. It's a tool. There are term plans that you can get your money back from after, if you pay in for 20 years. That's something called return of premium. And a lot of people don't know that most insurance companies don't offer that. And they think, oh, I'm going to get my money back. But the majority don't. And that's actually to help them keep the cost lower. So if you have that return of premium, you're comparing options between companies, it's going to make that more costly, more expensive.
Yeah, that's interesting. So return of premium is I mean, it's kind of a savings account.
Yeah,
You lose some money with time on the interest, but that's not a bad option to do if you wanted to do it. So
yeah, yep. And a little piece that most people just don't know about.
yeah, I would have forgotten about that. I don't know that I recalled that. So I know we want to get to the senior stuff, but tell us briefly about like what the difference with whole life is. Whole life is a lot more expensive, right?
Yeah. So per like unit of coverage, let's say per $1,000 of life insurance, whole life is going to be significantly more costly. You might hear people like Dave Ramsey say, "Oh, buy term and invest the difference." And there's some theory around that, and it may be valid. But there's a few truths to the situation. Because whole life is permanent, you have a guaranteed insurance policy as you age. If your health changes, if you get sick, or if your income goes down, you can count on that lower rate forever. You don't have to requalify down the road. And so if you want some guarantee that the family's going to have something, whether it is just for final expenses or it is a gift or whatever, it's a guarantee because it's whole life, it's permanent coverage, and it's not going to change down the road. You
Yeah.
don't have to have $500,000 of permanent coverage because maybe, when you are 82, you just don't need to give away that much, right? So you could have a small policy that's just that guarantee for down the road where when your term ends, you're not trying to requalify. Maybe you have a new chronic health condition and you can't get new insurance.
Yeah. How much
Exactly.
in general, how much more expensive is that?
Oh goodness. Well, like for instance, at my age, if am like 31, I could get maybe $500,000 of life insurance on term coverage for around $30 to $35 a month. If I took that same amount and went to a whole life coverage, it's going to be maybe 30,000 or $40,000. It's not going to be a whole heck of a lot comparatively when you
Oh,
look at
your
numbers.
coverage, yeah.
Yeah. Uh, but that's the difference is the guarantee and the continuous, hey, I don't have to requalify down the road.
Right. And
The
so
other
that's
piece,
almost estate planning at that point,
it
right?
is. Yep. And the last piece of whole life is that it does build cash value. So a lot of people have heard of a family member or a friend that cashed out and like took a cruise or whatever. And that's usually where that comes from is they borrow against the built up value in their life insurance and for some purpose, whether it's a need or a want, they can use that down the road.
Yeah. So briefly, universal life, the in between of those two.
Yep. So universal life kind of combines the two, and depending on how it's structured, it may build cash value quickly. It may not. It may be more like a term policy where there's very little of the premium goes to cash value, but it can adjust with your life. That's why it's called universal, because you can have the same policy and you could maybe this year you are all of a sudden you're making more money and you want more coverage. You just pay more into that universal life and they can restructure it without you having to go back through underwriting. If something happens down the road and you need to lower your premium, they can restructure it. Uh, a lot of people, what's really hot right now, it's called IULs. Not sure if you've ever heard of that, indexed universal life.
We'll explain it. I think I maybe have, maybe
Yeah.
not.
So it's basically a universal life policy that's supposed to build cash value that's credited against the stock market index, which is usually the S&P 500. And so there's other indexes that it could be credited against, but it's supposed to only ever gain value without losing the basis. So let's say you have $10,000 of cash value and the stock market crashes, your cash value is secured. If the
Mhm.
stock market performs really well, the cash value may increase at like 6 or 8%. Um, it's it is a great tool, but it's being very oversold right now, and that's something that getting an honest opinion on, uh, to understand how it could affect you 10, 20 years down the road is really important.
Yeah. I know sometimes these vehicles or insurance are used as vehicles for savings,
Hmm.
for different reasons. I know my brother did that, and when I looked at that, I'm like, I don't like it.
Yeah,
So I think it probably is a little bit dependent on personality, but or if it
it
makes sense
is.
to you.
Yeah, it's
Yeah.
definitely dependent on personality. There's, if you're looking at it as an investment tool, it's more of a secure kind of thing. So it's not crazy growth. It's not going to be like a house in 2021 that was just exploding in value. It doesn't do that necessarily, but it has security and guarantees that, some people do use for financial planning. Some people shun it and some people embrace it. But again, that's up to you and your financial planner, which always advised to do.
Yeah. Advice for financial planning, which we're not getting into that a lot, but insurance is usually a part of financial planning. So
Yep.
for sure, all the different kinds of insurance, because a catastrophic loss of any kind is going to affect your ability to manage your wealth. So
Yeah,
that's why it exists.
exactly.
Yeah. So let's move a little bit into the senior market then. I know this is what you have chose to do. So all these people are turning 65,
Mhm.
10,000 a day. Is that what you said? Something.
It's between 10 to 12,000 a day.
Okay. That's a lot.
More than a couple, that's for sure.
Yeah, more than a couple. So explain to us um, what they're hearing about this. What are their thoughts on it, and what is their confusion about it?
Yep. So there's like this huge push in the senior market for final expense insurance, or some people call it burial insurance or cremation insurance. And there's a lot of companies who market to seniors. It's very big in TV advertising. It's huge on all the social media. They're able to really target that demographic and bring up that need, because there is a need there, primarily for people who maybe don't have, big savings or some sort of healthy retirement account that they're going, well, I have all this cash over here. My family can use that when the time comes.
Hmm.
But it doesn't even exclude that, maybe upper echelon or upper level market, that may be a little more financially secure. And here's why. What final expense insurance does is it can be based on term or whole life, but it provides usually a faster payout of insurance death benefits to the family, to be able to make sure that they have the money right when they need it without going into debt, coming out of pocket, or even having to dip into the estate, right? And that's where it can protect each level of, financial, um, you
Yeah.
know
So
and
explain that situation. So, nobody likes to talk about death, but like planning for death is just something we do and we should do, and it's just a part of life, right? So,
Mhm.
so I think what you're saying is there's a death in the family, expected or not expected. So maybe it's not expected, but they're over 65, they have that final expense plan. So what I hear you saying, tell me if I'm right, is that they will get in time to pay for the funeral costs and burial costs, they'll get the money.
Yep, exactly. So that's where it really does come down to the fine print.
Mhm.
Um, some insurance companies will say, hey, we pay in 24 hours. But then the fine print, it'll say, oh, we require a death certificate
Mm.
first. And so it could be 3 or 4 weeks before they actually receive the payment. And depending on how things go, the funeral home may take that into consideration. They may charge you a higher amount. Um, or what some people do is they actually will take their policy down to the funeral home and hand it over to the director and say, hey, we just want to pay with this. Um, One big piece that most people don't know about is that if you do that, they can take a fee, an additional cost, because they're not getting paid today. So that funeral home is going to charge a premium if they don't have the money right when they want it. Um, and people will ask, well, why should I get life insurance as a senior at, $5,000 or $10,000 insurance policy? Why wouldn't I just go and prepay for this? And I've seen it before. I have clients who've told me the stories where a family member said, hey, I've got everything set up, it's all taken care of. And then they pass away, and you're at the grave site. The funeral director comes up and says, hey, I'm so sorry, but we can't finish the services. We've only been paid X dollars, and he didn't finish the other 3,000. So we need that before we're going to put him in the ground. And
Oh,
um,
weird.
just the simple fact of if he had even a small life insurance policy in that kind of situation, they could have said, "Oh, no problem, we've got it taken care of." But somebody had to take out a checkbook, take it out of their 401k or whatever, right?
Yeah.
Um, and so while prepaid planning is great, it's not guaranteed until you have that thing paid off and it's all good. Having some life insurance can be a pretty important piece.
Yeah.
And there's one other very big topic that people don't discuss or think about when it comes to life insurance for seniors. If you're married, if you have a spouse or somebody that you rely on for income, even if they're not, directly married to you, when they pass away, you don't get to keep both incomes from Social Security. And a lot of people, the majority of Americans, are reliant on Social Security for their income. And so imagine if your income gets cut in half. Can you
Mm.
all of a sudden afford all the bills next month? Whereas a life insurance policy can help you bridge the gap while you adjust your living situation.
Yeah. Yeah, that is very important for sure.
Mhm.
So if someone wants to, their term life is over, let's say they're 65, 70, 75. I
Yep.
imagine these it does range in price depending on how much you get and underwriting, which is health testing,
Oh,
right? So can you explain that a little bit so people kind of have an idea what to
yeah.
expect?
Well, a lot of people will be in shock when I've talked with there's like a 74-year-old lady. She had a 20 or 25-year term. It canceled. They sent her a bill. If you want to keep this for another 6 years, all of a sudden it's going to be $1,000 a month instead of whatever it was, $60 a month before. She
Yeah.
was like, that's absurd. Right. So I went over, we're addressing and looking at everything. And I said, well, this is what you can qualify for in permanent insurance, right? Similar budget of what you had been paying, but the amount, it was like 300,000. It went down to like, let's say 10,000. And she was like, well, that's absurd. I used to get this much. And
Yeah, but
that's just
you're about
because
to
of
die. You're not about to die. You're closer to death.
yeah,
According
well,
to an underwriter, you're closer
you,
to death. I said
uh,
that kind of rudely, but
but
uh,
that's exactly what it is.
yeah.
And it's the difference of going from term to permanent, right? She paid in for 20 years and didn't get anything back because she didn't have return of premium. And ultimately, in her situation, she decided, or we together combined and said, hey, you probably don't need it. Your house is paid off, your car's paid off. You could just set aside the money out of your Social Security for a couple of years and have your arrangements taken care of. But not everybody's in that situation. And some people just want to make sure that the family or the state is taken care of. I have a doctor or a dentist, a doctorate in dentistry, that I have coverage with him and his wife, even though they have like a $150,000 policy with one of those big permanent companies. They're like, hey, if we pass away, this needs to be the income for the spouse, but we don't want to have to take that policy down if we're tight on cash and use that at the funeral home and have them charge us excess fees.
Mm-hmm.
So right there, it's just protecting the estate and making sure that each individual in that family has the help they need right when they need it.
So what would you guess, do you have an idea about what they need to be planning for funeral expenses in general?
Yeah. So I do funeral expense planning on basically a daily basis with people. And so I'm all too familiar with the topic. If you're planning for a cremation and you don't have the money today, if you have a life insurance policy that you're going to pay for it, right now you're going to need between $4,000 and $5,000 of life insurance coverage. That's going to help take care of everything, pay the fees, and etc. Between transportation costs, death certificates, the cremation, they even put you in a casket for a cremation. But the level of quality service that you want, it could be a little less or a little more. If you want a burial, the really starts at least $10,000. And that's if you can find a plot of land for a cheap or decent price. But most people that I've been working with in the last 2 years, if they've had to do a burial that nothing was planned in advance, it was closer to the $12,000 to $15,000 range.
Yikes. Yeah, that is a final expense for sure.
Yeah.
Hence the name.
Mm-hmm.
So let's talk underwriting for a second. So underwriting, that's when prices vary per person based on their health.
Yes. There's a lot of different ways that companies do underwriting. Each individual company is different. One of the big things that people need to look out for is if they're going into one of these insurance companies that says, we don't ask any health questions. We issue a policy to anyone. And anything like that is going to have a 2-year waiting period before a death benefit's paid. And the rates are going to be, on average, much higher than anything that they could qualify if their health was even remotely decent.
Okay.
Now, that type of policy does have an important place, right? There's some people who got a cancer diagnosis and they're like, you know what? It's better late than never. And so I'm going to put in a policy with one of these guaranteed acceptance companies and just, hope that I make it through those 2 years and everything's okay. If you do pass away in that time period, the family gets all of the money back that you paid in. So it's not like it's all a loss. It's just not a full death benefit.
Gotcha.
Now, beyond that, a big factor are chronic health conditions like heart disease, lung disease, kidney or liver disorders, cancer is a big one, and diabetes. If your conditions are under control or with basic medications, you could probably pass through underwriting with most insurance companies okay. It's once they've been chronic or you're on some pretty heavy duty medications, and that's how they do it. Most of these companies nowadays are just running a prescription history check through the Medical Information Bureau. It's called an MIB report. They check your history. They know exactly what you've taken for the last 5 years, and they
Mm,
can say, this medicine's a risk factor, or no, everything you're on is okay. Let's issue this policy.
that's interesting. So they don't like send someone out to take your blood pressure and look at you and stuff anymore?
If you have a big policy, like let's say you're going for $500,000,
Okay.
some insurance companies will still require traditional underwriting, like a physical or a medical exam. But
Mm,
since COVID happened, they've really done a good job at improving the way they do underwriting and categorizing things. And most insurance companies are moving to that quick decision through the Medical Information Bureau, because our medical reports are all stored electronically anyways.
yeah.
They might as well use them, you know.
Yeah. That's interesting. Yeah, for sure. I know the world has changed since COVID, so that
It,
changed all kinds
it's
of stuff.
changed everything, yeah,
Even like how
including
we're
how you get insurance.
yeah. Okay, so let's move on to Medicare.
Yeah.
So you do Medicare for people, and that's kind of a big topic. So that's health insurance for seniors, and what are the things people need to know about Medicare?
Yeah, so a lot of people get Medicare confused with Medicaid.
Hmm.
That's a big one. I people come up to me all the time. Oh, I have Medicare, and they're like under 65. I'm like, do you, or do you have Medicaid? Like, oh yeah,
Hmm.
yeah, it's that other one. So that's a big thing. Is that Medicare is a federal health insurance program that's for seniors 65 and older, or people who have been on Social Security disability for 2 years or more.
Okay.
Um, so I have a client that's in Medicare who's in his 30s, but he's on disability, and he qualified after being on disability for 2 years. But primarily, this is for people who are 65 or older and don't have any sort of employer provided health insurance if you're retired, or if your employer kicks you off because you're Medicare eligible. Some of them do that, even if you are still employed.
Yeah. So
Um,
what should people expect to pay for a policy, Medicare policy?
Yep. So there's a couple different ways that Medicare works. There's original Medicare, that's just the federal system. It has three primary parts. Part A is hospital insurance, and that's free if you paid into Social Security, you or your spouse, for 40 quarters. So if you worked full time, or equivalent amount of 10 years of full time work
Okay.
before you turn 65. Hospital insurance is free. Then there's Part B, and that's doctor's insurance. If you need to go to a doctor's office, anything like that, Part B right now costs $185 a month. Most people elect to have it automatically withdrawn from their Social Security, and they don't even know that it's happening. It's kind of like in the back of their mind, right? They're not directly paying that bill. Some people do, but it's $185 a month. It went up $10 this year from last year. It used to be 174 and some change,
Okay.
and that does vary from year to year. And then there's Part D, and Part D is prescription drugs. Now, relatively recently, it wasn't when it started, you're required to have a prescription drug plan or some type of prescription drug coverage. And people will hear about things like GoodRx or one of these pharmacy discount programs. They might sign up because it's $5 a month or something, but that's not actually a prescription drug plan. And it could cause issues down the road if you think that it is creditable coverage. It's an important piece for seniors to know.
All right. So would you recommend getting both, having the RX plan and Medicare Part D? Or
Yeah, it really depends on your situation, right? So now that we know what original Medicare is, there's two ways that people move forward and finish protecting their health care, because most of the time, Medicare only pays for about 80% of your costs. And so if you go into the hospital and you're on a fixed income, do you want to pay 20% of a hospital bill?
No.
No, right? Nobody, I mean,
No.
you can rack up $50,000 in a week at a hospital. And
Yeah.
I don't know about you, but I don't really want to pay 20% of that myself.
No.
So people look at supplementary Medicare coverage. And so there's two types. That is a supplement plan or an advantage plan. And a lot of people get the advantage plans confused. Some people refer to them as Part C, um, Medicare Advantage. There's a lot of different names, but um, those two are the big differentiators: advantage plans and supplements. Now
Okay.
we'll touch on supplements first because this was how most people used to do it. The supplement plan is like a private, it's kind of like having dental insurance, right? And you pay for it, costs $30 a month or whatever, you can go to the dentist. Well, the supplement, you pay a monthly fee and they cover, it's supposed to cover that other 20% that Medicare doesn't. So it fills in the gap. That's why a lot of people call it Medigap coverage.
Yeah.
But
Makes sense.
there's a lot of different ways those plans are structured. And so if you're thinking about a supplement or a Medigap plan, it's important to really sit down and analyze your health care needs before you make a decision, because you only get one time of a guaranteed issue where any you could have cancer and they have to write you a policy. When you turn 65, it cannot deny you.
Oh,
Uh,
interesting.
so if you have really complex healthcare needs and you have the monthly ability to pay for that supplement, it could be a very, very strong way to do your Medicare plan. The other piece is that you have no network. Like you have to stick within these doctors. You can go anywhere that Medicare is accepted, which is nationwide. Um,
Okay.
Very few
With
doctors.
Medigap or the Part
Medigap.
C, you can do that.
With Medigap or supplement plans, yes.
Yeah. Okay.
Those specifically, because you're still with original Medicare, you have no required network.
Okay.
People that travel, people that get out of town, that's a really important piece for them. And so they like that. Um,
Yeah.
yep,
So I want to recap a little bit because I know you talk about this every day, but I'm processing it and
of
maybe
course.
it's people are too. So basically you would want to get Part A, Part B, Part C, and Part D.
So
Hypothetically.
Part C is not required.
Okay.
Part D is. Um, but yes, once you turn 65, if you don't have creditable coverage from an employer, you want to sign up pretty much as soon as possible. Because if you don't have um, prescription drug coverage, you can get fined later in life when you finally do sign up because you did it too late. Uh,
Wow.
it's called a late enrollment penalty.
Okay.
And there are prescription drug plans that cost nothing out of pocket, no extra money. And so it makes complete sense where even if you have super basic healthcare needs, you don't think you need it, like, I'll just sign up in a few years when it's more important. Don't do that.
Okay. So Part
Zero
D can
dollar.
be a zero cost.
Exactly. It
Okay.
can be.
All right.
It does depend on your market. So, I can't
Right.
guarantee in every single place, but most places have a $0 plan.
Okay. So can you go through again and just tell us kind of the expected cost per part?
Yep.
So,
So part A is free if you've worked full time for 10 years or if you've put in 40 hours or 40 quarters, sorry, of payments into your social security.
okay.
Um, or if you're like a stay-at-home spouse and your partner did that, that qualifies, like because you filed jointly or whatever, it qualifies you.
So
So
are there exceptions on that? 'Cause what I'm wondering about is like you had a spouse who did that, but you get remarried too early. I've heard that can cut it and not make it happen. Or if you're
yeah,
working past 65 or what are there like the devil in the detail stuff?
there are some exceptional circumstances that can make Part A not free. And there's a lot of people who had to take early SSI or, but they didn't quite qualify for disability, and so their Part A isn't paid for. And I looked it up for one gentleman just about a week ago, and his would have been $253 a month. And he's like, I don't want that. I said, you don't need it, because he just has prescription drug coverage. So that's the one that's required. You don't need Part A and Part B if you're in some interesting bind. Yeah.
So you have to basically get a Part D pretty much as soon as you turn 65. That's the requirement, and the other ones you can pick and choose from?
Yeah.
Is that right?
Yeah, it really comes down to your specific case. The majority of people are going to want to have A and B and D, because most people want to make sure they can go to the hospital, the doctor, and pick up prescriptions.
Right.
Yeah.
So A is hospital, and that's generally free. B is the doctor, and that's
$185 a month. Yeah.
And then D is prescription drugs, and that's generally free. And then Part C, that's the supplemental for what isn't covered at a hospital, or that's for the 20% that's not covered, right?
So Part C
Right.
is different from a supplement plan. That's like the delineating factor here.
Okay.
So the supplement plan, those are over here. This is Medigap, Medicare supplements, things like that.
Okay.
That covers the 20%.
Okay.
If you join Part C over here, what Part C does is it actually combines A, B, and D all together into one plan. And that's called a Medicare Advantage plan with prescription drug coverage. And so that does come down to a county by county basis. Every county will have its own Medicare Advantage plans. A lot of them will look very similar to the county next to them, but if you're in a very rural spot, they might not even be available. If you drive 100 miles outside of Reno, where we live, there's not going to be any Medicare Advantage plans offered. You have to be on a supplement. They just don't have big enough populations to support that type of coverage.
Okay.
If you've ever heard of a PPO or an HMO health insurance, that's how Medicare Advantage plans work. So they're a managed care organization. They're the big names in insurance. If you think of a healthcare insurance company, they probably do Medicare as well. And they'll have a specific network of doctors, hospitals, and specialists that they will work in. For a lot of people, this is going to be the route that they take. It's about 60%, 50 to 60% of Americans are on Advantage plans. And the reason is that they, for the most part, have no additional out-of-pocket cost above your Part B premium. So most of them are built around a $0 monthly premium. They cover your prescription drugs with some small copays. They have a fixed maximum out-of-pocket cost that you can build into your budget in an emergency type of situation. And then they have set copays for all of your visits to the doctor, routine stuff. And then they also provide, or can provide, supplemental benefits like dental, hearing, vision, or other things like a lot of people hear about flex cards. Those are always associated with Advantage plans or Part C.
Okay. What's a flex card?
Ooh, that's a good question.
Thanks.
Flex cards, as most people refer them to, are usually over-the-counter spending cards. And each individual company will determine what you can and can't use them for. But what they'll do is they'll load up a certain amount of money on, it looks like a Visa debit card or something like that. And they'll give you that on a monthly basis or quarterly, depending on how the company works, to go to the store and buy over-the-counter supplies. Some of them let you buy groceries, like healthy foods. Some of them allow you to use it to pay for power, like utilities. or even gas at the pump.
Mm.
There's quite a variety, but each company has, different restrictions in how they work.
And so that's part of the Medicare Advantage plan for
Mhm.
some things. All right, so I am curious. I know you have stories about people who've bought a Medicare Advantage plan from someone who maybe doesn't know their area and that hasn't worked out for them. Why might that be?
Yeah. So every Medicare Advantage plan has networks that they work in. Just this week, I met with a gentleman who had been sold an Advantage plan that he did not know. He could not go to the preferred hospital or his preferred doctor that he's been going to for years. They
Oh,
just said, "Oh yeah, this is the greatest thing since sliced bread." And he's like, "Sounds good." He didn't even think to ask or know that he should ask about networks.
okay.
So that's a big piece of it. The other piece is that networks can change. In July, I helped a couple who had been with one insurance company for many years. And that insurance company lost a major contract with one of the largest cancer centers in northern Nevada. This happened back in April of this year, and the husband is going through treatment. He had to leave his network provider, go to a different place, wasn't having the type of service that he really wanted. And so when they found out that there was a different organization that could still visit that original cancer center he liked so much, they were obviously overjoyed that I would be able to help them make that switch.
Yeah, I can imagine. Yeah, making a mistake with this can be devastating, which is part of the reason why I wanted to have you on, because I do think they just don't know who to ask the questions to, and they don't know if they're going to be sold a bill of goods that isn't true. So
Hmm.
I certainly, by doing this, would like to have everyone, and also I've seen, you know, my mom and aunts and stuff really kind of like get and uncles and stuff like that are in that boomer age get frustrated and concerned that they're
Yeah,
making a bad decision or which decision should I make? And that's like because then you're relying on someone that you want to have a very honest person in front of you like yourself, which is why I wanted to have you on to just talk through it and this is and explain it all accurately
yeah.
and kind of with what the expectations should be. Yeah.
So there's a big piece there that you touched on, and I think it's really important um, to be working with someone like myself, who's
Mhm.
a broker with a lot of moral integrity. And here's why: there's a lot of telemarketers that are brokers, but they may only contract with 3 or 4 different nationwide organizations, and they don't even know what is happening in your market. And
Yeah.
so if you live in Central Texas or Southeast Florida and you're getting a call from one of these telemarketers and they say, "Oh, well, I've got better benefits for you on this plan," get you to switch, and you find out that, like you said, it's not the bill of goods you were sold. Um, it's really important to, just find out someone who's either willing to do the research for you
Right.
if they don't live in your area, or somebody who knows your area like the back of their hand.
Yeah.
Um, my service is a broker does not cost anything extra out of your pocket. We're compensated by the insurance companies that we work for, and our compensation is set at a federal level. So
Yeah.
one insurance company can't incentivize me over another. I want to do what's best for my client because it helps with retention and that long term relationship that I'm looking to build with the people that I serve. And so if you find somebody like myself who has that type of integrity and wants to do the research, they're going to ask you the right questions.
Yeah.
And that's a big way you can find out. Are they asking you questions, or are they just selling you benefits?
Yeah. Can you explain? I think a lot of people probably do know the difference between a captive agent and a broker, but can you explain that for
Yeah.
us?
Yeah. So a captive agent would be somebody that works directly for a single insurance company. Um, there are some captive agents that work for an organization that may contract to 2 or maybe 3. They're not really a broker because they don't have access outside of their system. They're like captive to an agency, even though the agency brokers. But that the captivity keeps them from even being able to explain what the competition could be doing, how they may be able to be better served from a different organization. And what they're going to focus on is their benefits, whether they're greater or their cost is less. They're going to try to sell you on something like that rather than making sure that the solution you choose fits your needs best.
Right. So if you do choose to work with a captive agent for some reason or talk to one, probably the best idea would be to get more than one person to talk to. So
Yes.
here, come have more than one person to talk to. But yeah, I do like the broker in general in insurance for that reason, because you have the ability to go to different insurance companies
Mm-hmm.
and just pick and choose what's best for the client. I've generally really preferred that myself. So that is
I
a nice
think, yeah, and I think a lot of people are intimidated. I've had people just talk to somebody this morning, and I was telling her, hey, have your friend give me a call, and I'll walk her through a couple, different questions and make sure that whatever, even if she doesn't choose to work with me, the plan that she picks is the best one for her. And
Mhm.
she said, well, what does that cost? What are you going to charge her? I said, nothing. I'm just out here to do the right thing. And, it's not how compensation works in our field.
That's interesting because I wouldn't even have thought that would be something people would be confused about. But of course, if you don't know, you don't know. So there's not a
Yeah.
cost to have you come talk to you. You get paid basically by the government or the insurance companies,
Yes.
the government pays the insurance companies to pay you. So
Yes.
yeah,
Big
that,
thing that we have to say. We are not federal employees. I
we're
do
not.
not work for Medicare. Yeah.
Oh yeah, because it is like that. Maybe people don't know that either. So the government
Yep.
contracts with the insurance companies, correct?
Yep.
And then the insurance companies deliver the insurance
Yes.
so that the government isn't in the business necessarily of insurance. They are in the business of paying insurance companies to make it happen. Is that accurate?
That's accurate when it comes to Part C,
Okay.
right? If you are on original Medicare with a supplement, the federal government pays the doctor directly um, through the Medicare billing, portal or whatever, however they do that, right?
Okay, I got
Um,
it.
and then what's left over, you turn over to your supplement company and they pay the leftover.
Okay. So I appreciate you. If I'm confused about that, I imagine maybe someone else is because I'm
Yeah.
brilliant. So no, I'm just kidding.
Yeah.
Yeah, that's good to know. So A again is the hospital and the government would directly pay that bill, and then B is the doctor and the government would directly pay that bill with Medicare. And
Hmm.
then the supplement Medicare Advantage plan or supplement plan would tell me if I'm right. So that the Part C Medicare Advantage plan would be the government paying the insurance company who pays the claim. Is that
Yes.
accurate?
Yep.
Okay.
Yep. So in in a Advantage plan, if you're not with original Medicare anymore, you've joined an Advantage plan. The federal government pays them a monthly stipend, essentially, for each of their members. And so then when you go to the hospital, it's up to that insurance company to pay that claim. And here's one piece that it really makes me like Advantage plans. From an outside perspective, I'm obviously not in Medicare as a recipient or a beneficiary.
Mhm.
Um, but one of the things that I have seen with some of my own clients is that the Advantage plan, that they are incentivized to keep you healthy. They are
Mhm.
more profitable as a company if you're not going into the hospital, um, every other week because
Right.
your health is so poor. So
Mhm.
they do supplemental benefits that are there to help you be healthy, help you be happy, taken care of. That way you're not having to use the healthcare system excessively, and they don't make more money off of you if they're if
Yeah,
you're
they don't, yeah.
right.
Right, because like, here's your stipend, so, like, they're wanting to and isn't Silver Sneakers, is that nationwide?
Yeah,
So,
yeah,
like, that's an example.
that
Are you
is.
surprised I know about that?
That's one of those little benefits that most Advantage plans have, a free gym program where you can go in and get your get your workout on, get healthy, take classes, and you're not even committed to just one place. You can go nationwide or just across town to a different one if you want to try it out.
Yeah, that's awesome. I know my mom, who she must be on, I don't even know. I don't handle her insurance, but on an Advantage plan because she said that sometimes she'll get bonused, a little bit of money for doing certain activities. They'll just send her a little bit of money for
Yep.
those and stuff. So,
So that's her little flex card. And many of the insurance companies will give you extra money on your flex card for doing routine preventative stuff like, oh, did you get your mammogram done? Oh, did you get your flu shot? Here's $50. Go spend it at the grocery store, have fun, get some Oreos.
get some Oreos. That's not there's that's not healthy. We're not
Well,
promoting those.
yeah, the those little like boosts have less restrictions on what you can
What
use.
you can get with it. Yeah.
Yeah,
Just do the thing that we want you to do to stay healthy, and then you have some spending money kind of thing.
yeah, exactly.
Well, this was an enormous amount of good information, and I know you're licensed in a few states beyond Nevada,
Yep,
um, California, Texas, and Florida. Is that correct?
that's correct. I
Okay.
like to say I'm coast to coast.
Coast to coast. Proud of
Uh,
myself for remembering. And then, in any other state that you're in, there are people to help you with this.
exactly.
Yeah.
And this is one thing that I'd love to leave your audience with is that, ask a lot of questions. Visit with a broker. See if you like their personality. If you think, does this person going to return your calls when you have a question? Because we are compensated to service our clients. Um, don't be afraid to sound stupid. I love answering those questions. And if you're trying to work with somebody and they're not trying to be overly helpful like that, go find someone else. There's somebody out there who wants to do an excellent job to make sure you're taken care of the best way possible.
Yeah.
And if it doesn't cost you anything out of pocket, you might as well take their services and be well informed and taken care of.
Yes, for sure. That's such good advice and such great information. So, Xander, thank you so much for coming on today. And I
Thank you
appreciate
for having
you
me.
as a human, and I appreciate you coming on. So,
Yeah,
yeah.
this was awesome. Thank you, Mary.
Yeah, you're welcome. All right. See you
Bye,
all next
everybody.
time. Bye.